So I'm playing basketball with my boys this weekend. Caught an elbow to the eye, so made me start thinking about the analysts from last year. So all the analysts last year were calling for a recession, and it never happened. And so now all the analysts are calling for a soft landing this year. Their track record hasn't been too good, and so in this episode we're going to dive into whether we should trust them or start thinking for ourselves, because certainly they've got some black eyes and some bruised egos. So stick with me. My name is Brian Cannon, and welcome to Markets in 5. Diving right into the S&P 500. During the last episode I did 2 weeks ago on Markets in 5, we had this market that was coming down a little bit, and we were looking for this area to kind of hold its support. And it did. And then I also discussed the fact that the market could easily come up and double top, and it did. So it came all the way back up, seemed to double top, and found resistance again. So this is a massive, massive move up from in Q3 last year, and so it's very common to basically consolidate those gains and just kind of bounce around this area here, and then ultimately we want to determine, does it break up to the upside? And that would be great, and break out and have all new highs. Or does it find resistance, can't get through it, and breaks back down? And if it does, then we're going to be looking for these various levels of support down here, the moving averages and the channel trend. But again, we've got a negative divergence going on right now, and it seems to be steepening, right? So we've got an RSI levels that are dropping as the market is going up. And so, in technical analysis, there's no 100% of anything, right? So it's a matter of kind of putting the pieces of the puzzle together. So this is one important piece that could be an early warning sign of a pullback. Now, February historically is not a very great month for the market, and so maybe this is a prelude to kind of a pullback. I think ultimately it could be a good buying opportunity when it does pull back. But I think this year we're going to have to stay very, very nimble. All right, if I've said it once, I've said it a million times on this show. The key to the stock market this year, I believe, will be the unemployment number. And lately we've seen some headline news of companies laying off. And so we want to be keenly aware of that, because if we see this unemployment number tick up, get out of the way here a little bit, it's very, very low historically. But when we see this number tick up, you're going to see the market drop. It's just what happens. And so again, we've got the yield curve inversion have also been kind of beating the drum on, and so when that yield curve starts to normalize, and the Fed begins to stop, it begins to pivot in lower rates, then it's going to be to hedge off a recession. So will it be a mild recession? Will it be a deep recession? I guess there's a lot depending on that. So, but the unemployment is something you've got to be watching. So again, when you do see the Fed begin to pivot, and you've heard that term in the news a lot, the Fed is pivoting. So they're pivoting from raising rates. Now they're pausing rates, and so the market's been kind of running nuts because of the anticipation that the Fed will lower rates. But again, the Fed will lower rates to stave off a recession. And so in a recession, when the Fed begins to cut rates, the S&P doesn't do very well, right? So it's going to be time to kind of take profits and reposition assets. Bonds typically outperform as well as gold. All right, the last chart I'll go through today is the VIX. We went through this a little bit, again, a couple weeks ago, but again, I think it's important to keep your eye on it. The VIX, again, is a measure of fear in the marketplace. We've got options expiration coming up tomorrow or on Friday this week. So, that will always add in a strong element of volatility to the market. And volatility is on the rise a little bit right now. We've had a positive crossover on the MACD. It's, crossing up and heading up on the RSI. And is sitting historically at lower levels. So we do have some, there is some room here for a market decline and an incline in the VIX coming up soon. And again, with options expiration coming up, and the put call ratio where it is, I would just say near term, there's a little bit of risk. And again, I think it should be a buying opportunity. But again, you just got to kind of watch the levels and make smart decisions. So in wrapping up, you can see that maybe in the near term, we've got a little bit of turbulence that we need to kind of wade through. But I really think it's just going to be a volatile year. I think, I'm not saying it's going to end badly. I just think that there's going to be a lot of ups and downs and swings. We may end flat. We may end up a little bit. We may end down a little bit. I mean, at the end of the day, no one really knows. So that's why I think it's important to stay nimble. And that's what we plan to do. So, but if you have any questions, give me a shout. And I look forward to seeing you on the next Markets in 5.